Good morning, everyone. This is Marshall Gettler bringing you the morning comment for February 18th. Well, Greece has offered half a compromise. The Greek newspaper Kathimerini reported that Greece will request a 6-month extension to its loan agreement. This is half of what the Eurogroup wanted. However, Greece still refuses to accept the reform program that goes along with the loan. On the contrary, Prime Minister Tsipras announced that his government would begin submitting legislation to overturn some parts of the program. Now, Greece's proposal is similar to the one that was floated on Monday by European Commission Economic Chief Pierre Moscovici, but quickly rejected by the Eurogroup of Eurozone finance ministers. The plan is due to be sent to Eurogroup Chief Dijsselbloem this morning, who will decide if it merits calling an extraordinary Eurogroup meeting on Friday. Greece's move is seen in the market as somewhat of an advance, and the euro has strengthened this morning, while the safe haven Swiss franc and yen are the worst performing G10 currencies. Personally, though, I don't see any compromise here. The fact that Greece is submitting legislation to overturn the conditions of the program shows them closing the door on compromise, which is euro negative in my view. I await Dijsselbloem's response, however. It may be that he decides to give in rather than push the situation to the brink. You can see why he might do this if you read our daily comment today. I have a big section explaining why Greece leaving the Eurozone would be a disaster for Europe. The Bank of Japan kept policy steady today at its meeting, as everyone expected. The commentary that accompanied the statement was somewhat more upbeat than before. Curiously, though, it also said that, quote, inflation expectations appear to be rising, but I couldn't find any proof of that at all. I still expect that they'll have to increase their stimulus at some point down the road, and I remain negative on the yen. Indonesia unexpectedly cut rates for the first time in 3 years. The country thus joins the parade of countries cutting rates. As for today's highlights, during the European Day, we get the UK unemployment rate for December and Bank of England February meeting minutes. The minutes are likely to show a similar outlook to Thursday's inflation report, so the markets are likely to focus mainly on the employment report. A decline in the unemployment rate and acceleration in average earnings could bring forward estimates of the first rate hike and thereby strengthen sterling. The ECB will hold a non-monetary policy meeting to decide whether to continue providing emergency liquidity assistance to Greek banks. If the ECB takes this assistance away, the Greek government may have to impose capital controls to avoid mass withdrawals and the collapse of the country's financial system. In the U.S., the Fed releases the meeting minutes of its January 27th to 28th meeting. Any reference to when they may start normalization or even remove the line about being patient could boost the dollar. U.S. housing starts and building permits for January are also coming out. Both figures are expected to rise, keeping the overall trend consistent with an improving housing market. Industrial production for January is expected to rise, a turnaround from the previous month. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gettler, head of Global FX Strategy at IronFX Global, wishing you solid trading.